Hey, Steve, Andy, how's it going today?
Hello, it's going all right. Thanks, Scott. You only cut out once, which was great, so we pretty much heard everything.
Yep.
The webinar is Trade of the Week, and this is Andy helping me out. Hello, Andy.
Hey, Steve. Hi, Scott. Hello, everybody.
Andy's going to help us in the questions panel. If you have a question, you can use that panel like Scott discussed. And Andy will speak a little bit about the AI in a moment. But welcome to the recurring webinar every Tuesday, Trade of the Week. Let's get started. The disclaimer, the old first slide is the smart, educated, or I should say the seasoned attendees are slowly coming in because they know I start off with this slide. And it's the same old thing, which is, of course, we are a software as a subscriber type of service. We are not registered investment advisors, so if you're looking for financial advice, come to the wrong place. We're going to share a couple of opinions and mark up a few charts, but by no means should that be construed as financial advice. If you need that, you got to go to the right people. And so, yes, Trade Ideas is, I think, over 14 years in the making now. Myself and Andy were around for the first few months, if not the first few weeks. So we've been around for a long time and seen a lot of changes on top of layer. And so there's a lot of layers to get into and learn this program. It's very difficult to get a good grasp on the totality of it in just a few days. So a lot of people take advantage of our promo codes, which Scott will talk about again at the end. And a good month, is a good period of time to try and digest the power of this platform. And some of the ways in which we help do that are the following here: the live trading room with Barry. He is on vacation this week, but the room will still be open and moderated by the normal crew in there. But free bell-to-bell live chat room. He doesn't like to call it a chat room. We call it a live trading room. But it rivals a lot of chat rooms out there that charge you a good monthly subscription. But this is free and open to anybody. So if you got questions on the product or questions about trading, that's a great place to start. Again, he makes himself, Barry reminds us all the time, please send them to my room and I will demonstrate something for them if they have a question and want to see it. Because a lot of people are visual and they need that visual to learn. So there's that. There's the 4 webinars every afternoon. I helped out Jamie yesterday, and tomorrow Brad and Dan will be around. And Thursday, Andy will talk about some observations in the market and whatever else he's come up with at that moment. And then on Fridays, we don't have an afternoon webinar, but we have a 3-hour support session. Trying to learn trade ideas by calling up, asking for a phone call, it just doesn't work over the phone. You need something like this, Friday support session. So mark your calendars. It's 3 hours of your content. You guys come in and say, hey, I'm having trouble designing a scan to X. Or, how do you guys show me how to find questions? They can sit back and learn from osmosis and from other people's questions. And again, a great stepping stone to learning the depth of this platform. That's the Friday support session, open to everybody. And then, of course, TI University on the next slide. We have a 4-part live series. These are not evergreen. There is somebody there to discuss it and again, live demonstration to ask your questions. But it's a 4-part content-oriented series designed to start off with the basics. So, what we're finding is a good chunk of people show up for Monday and Tuesday, and then by the time we get to intermediate and advanced, about half of them or more might have even dropped off because they've kind of got the gist of what they're looking for. And so that's the idea behind the TI University. Just come in and get kind of a nice, quick running start. Always the ability to interact with us. Like I said, it's not. It's the same format as we're doing right here, basically. Go to webinar, speaking, asking questions in the questions panel, demonstrating and replying with the microphone. So that's TI University. All those things together make for a great onboarding experience to learn the depth of this extremely powerful product. Some people get a little frustrated. I'll be honest with you. They say, this isn't for me. Well, this isn't for me for that particular personality type. I'm overwhelmed by this and I don't even want to try it because I don't want to feel bad about myself. I mean, we see that all the time. It's a shame that more people don't take the time to at least break through a first few days and not get overwhelmed with the product. But we do see that, and that's kind of sad. I wish people would give it more time. So man and machine combined, this slide always kicks off our content for the trade of the week. This is the new world we're stepping into. We're going to work hand in hand with AI machines, and it's going to be a good symbiotic relationship. the software, the machine, and the man going forward in many different aspects of our life. So today's agenda, we're going to stay kind of similar to what we've been doing. Market recap. This I'm going to call resumption. We'll talk about that in a moment. Holly recap, some interesting discussions Andy's got in store. The trade of the week, we'll check in on that one and maybe a couple others. I think it's worth a sector glance. I'll say why we need that. We have a nice technical setup here in the market now. I'll get to that in a second. So we'll look at some sectors and see which ones might be really poised to participate. Set some alerts. Take a look at last week's alerts. I got some interesting observations from last week's alerts, and but I did find some stocks back to the long side now that the market is showing us some resumption, some resolution, if you will. And a couple thoughts on the ebook at the end there, just to kind of wrap things up. All right, so let's get going here. I'll bring up trade ideas. I've got my magic marker. I think we use some new color today. We use blue. Why not? Okay, so for those of you, we do have some regular names in here. Of course, you heard us yesterday. I'll click back one tick. This is what it looked like yesterday in Jamie's webinar, where we talked about, and even last week, we talked about the three scenarios: a nice deep pullback. I'll call that a deep pullback, maybe down to the midpoint, or maybe a shallow pullback that makes sense, or the bullish of all three scenarios, a consolidation in the sideways fashion. We talked about that three possibilities last week. I remember drawing those lines. Well, what we got a week later, we got the bullish of all scenarios, a nice sideways action. It's a horrible arrow. But what's most interesting about, these 4 or 5, except for this day here, these 4 or 5 little doji spinning top days, they were gravitating, they were loitering around this orange line, which we know to be very significant. As we look back, we moved the lines back and called this our new trading range. Again, there's resistance here, there was support back here, resistance here. So these lines made sense. We drew them, I think, 2 weeks ago. Yeah, we drew them actually a week ago is when we drew these things, when the market looked more like that. So my point is, those dojis, these dancing dojis here, just went sideways at a critical level. And they didn't even wait. What I had mentioned yesterday is I don't know when it's going to happen, but pretty sure yesterday I mentioned again that I think the resolution is going to be higher. It's just too much of a bullish scenario when we see, given the three consolidation type of action, we see the sideways action, especially hugging this important pivot line there. It just felt like it was a foregone conclusion. We were going to go higher. Was it going to be on news? Were we going to open up? I even drew some lines. We could open up tomorrow, and all of these moving averages, we could open up, come down and touch this rising moving average, and that might be the signal, for the market to jam higher, because a lot of times we have counter moves before we have the big move. If you're a swing trader and you have a position working. Otherwise, if you're a day trader, you've missed on all this alpha here in that gap, and all you've got to work with is today's range. But we're not here talking about day trading. We're here talking about swing trading. That's what the trade of the week's focus on, and that's what Andy and I specialize in. And so coming out of yesterday's webinar, it felt like we were just going to have to go higher. We didn't know how we were going to do it, on news or on an opening drive down or what have you. But that's why I'm using the word resumption. It's a resumption of this trend. We also got a resolution of the tight sideways bullish consolidation there. We didn't even need to touch these moving averages for kind of a counter move confirmation, which we see so many times. I mentioned that even in the Qs. Boy, these things sideways action in the Qs as well. Point of interest in the Qs was the blue 50-day moving average that was holding the price back a few days here. And then, when price does get repelled and doesn't even attempt to touch these rising momentum lines, 10-period moving average, that just tells me there's even more strength in there than we realized. A lot of times these lines will force the issue before there's even a touch. Personally, I like to see a confirmation of a touch, because the market-making algos that run our markets, they're not humans, they're machines, and they have to be programmed, and so they've got target points and this, then, if, then, reverse, whatnot. So a lot of times they need to fulfill their OCD destinies and come down and touch those lines, but when they don't, that just tells me there's even more strength in there than the market could corral for the most part. Wally, there's a question with the higher wick looking like an inverted hammer. I don't think I try not to get too caught up on these types of wicks unless they're after a giant move. And we didn't really have a giant move. We just had 1 day's worth of move. And I was kind of surprised, Waleed, last week when we had this candle here. I was in your camp saying, oh yeah, after that 5-day bounce, I'm thinking this candle, in a single candle, does give us something. And I even went out on a limb and said I'd be real surprised to see the next day if we trade back through that wick. Well, of course we did. We gapped up to it and then traded back down through it, so it got real messy. But the point is, I see more significance in the resolution coming out of this than I do just 1 day's single candle. And a lot of times when you break out of these wedges, a lot of times there's so much momentum pent up in there that you might not even get a chance to come back and fill a gap on a situation like this. So I'm not saying it's not going to happen, but I'm saying the odds don't really favor a chance, giving people a second chance to come in and get in. It's going to reward the people who took the chance and identified nice sideways consolidation there. What else? We have the Dow was looking really strong yesterday. It was the most interesting looking of them all, I thought, because it was above its 50, just like the opposite of the Qs. Boy, look at that giant volume bar popped in there today. Big buying in the Dow Industrials, and the ETF reflects that right here. So forget the candle over there in the S&P. The Dow didn't really want anything to do with that kind of a candle either, did it? Let's go back to the Qs real quick. The Qs did have a pretty decent backwards candle, more so than the others. So then tech was a little leery towards the end of the day, it looks like. And then lastly, the same comment, usually is the IWM. It's trying to participate, but it's still got caught up here. It is above its 200-day moving average, which is one positive aspect. It got caught up under its 50, but this one has been a technical mess for a while. And it's, if the market does resolve and move higher, then more than likely it's going to drag this IWM higher. What we didn't want to see if you're a bull is see the IWM start to leak and drive the market lower, where the rest of the ETFs and indexes have to pay attention to, hey, what's happening over there in the small cap land. But we didn't have that scenario. So we have the scenario where the S&Ps look like they want to keep moving higher. Look how close we are back to our all-time highs. We're going to have to wind up putting a new line up there. We're going to go ahead and get rid of this line. And probably get rid of this line too, because I don't think those are no longer in play. That sideways action took those out of play with the resolution today. And I saw JC Peretz, who did a great job speaking at our summit last year and will also be there again this year. He said triple tops are extremely rare and quadruple tops don't exist. So we're approaching triple top territory here, and it's about as cup and handily as I think you can get. Wouldn't you agree there, Andy?
Mm-hmm. Oh yeah.
So
yeah, now we're approaching a double top. So a triple top has not really been made yet, because we can't call this movement a top yet. But
you can't call that like a double top there.
No, it's definitely a double top, but it's not a triple top. So I'm saying, because
no, I'm saying no. What I'm point. JC is trying. JC is making a veiled call here. He's saying he's extremely bullish. You're insane to be bearish. There's no such thing. Well, there's very, very rarely seen as a triple top. So for those that are sitting here waiting and saying, okay, well, I'm just going to wait and see what happens when the sellers get here. No, the guys like JC and the aggressive bulls are saying today this is a significant day today. This is all I really needed to see. Resumption coming out of here and pushing higher. We're again in the foregone conclusion territory that we are going to come back and test these levels. I just don't know when or how we're going to do it, but I think we're close enough in the neighborhood to where we're going to do it. And what JC is saying is you won't have a third attempt that denies price action.
Gotcha.
Typically that doesn't happen. This is what happens here. That's the golden scenario there.
Okay.
So, good. I knew we were on the same page.
Yeah, we were. The way you phrased it, you said we were approaching a triple top, and really that was not the correct.
You're right.
Say.
We're approaching what could be a triple top. However, there's no such thing as a quadruple top, but a triple top is extremely rare. Anything you want to add to this craziness here?
No. I mean, you stated everything very well. I mean, it's pretty, it's so obvious. Right? There's, it's really strange. 2 weeks ago, there was a lot of bearish. I mean, people can make a lot of bearish arguments, but down below the 200 there, yeah, there were a lot of arguments and they were valid. Now, there's really none. Which, is usually when something crazy happens. But no, Steve, yeah, Steve's right.
We only spent 2 days down there in Dangerland, really,
I know.
technically, and of course we talked about it. But next day the market opens,
Was
and
the next day? Look at that gap and
next
go.
day was the pro gap. Next day was the pro
Yeah.
gap, and we said pro gaps should not be taken lightly. They can build on themselves,
Yep.
and boy, did it ever. And so,
Yeah.
great volume bar, great resolution. Foregone conclusion, we're going to test these levels. I don't know when or how. If you're bearish right now and you're stinging along a lot of shorts and you're a deer in the headlights and you're afraid to get out of them and rip the Band-Aid off, well, be prepared that you might have to be making some decisions pretty soon.
And what's scary, Steve, and what's disgusting, I should say, is we're going to go to all-time highs, and we're still going to cut interest rates. So, but
The treasuries,
Oh, well.
we can't decide who wants to lead, treasuries or stocks.
Yeah.
Yeah, it's a very unusual times we live in. Market at all-time highs, daring the Fed to cut rates or not
Exactly.
cut rates. Tell you what, if
Sad,
the market,
man. It's really
market,
sad.
if it doesn't cut rates, you might see a serious negative reaction, because what you're seeing is a bunch of front running. You're seeing a bunch of people anticipating,
Sure.
down here. Of course, what did we have down here? Let's not forget, we had the Fed governor get on a microphone and start blah, 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 and there we go. So,
And I would even go as far as to say, guys, if when is that? Tomorrow? Is it tomorrow?
yeah, tomorrow. Mm-hmm.
I would even go as far. I would be. Even if they cut rates, I think it's probably priced in. So you got to be careful tomorrow. Yeah.
Tomorrow, yeah, I agree. We are
It could be a sell the news event real easy.
Yeah, we are at such a precipitous levels here, precarious levels, that there's going to be a lot of volatility regardless of what happens tomorrow, whether it's priced in or whether it's a disappointment. We just got to see how the market reacts. The only one constant that we laugh about on Fed Day is the market opens for 4 hours, and then you take the high and the low of that opening, and then when the Fed numbers come out, you usually create a new high and a new low within the remainder of the day, which is always fun and scary.
Yeah.
All right. So that's that. We're going higher probably in the short term, but I will preface that with Andy's reminder. Thank you very much. We do have a major catalyst tomorrow. It could be something of a disappointment or volatile, unrealized reactions. We'll see.
Maybe it's that jam down you were talking about to the moving average, to the fast line.
Could be.
Maybe it happens on that.
We'll see.
All right. Let's see. Let me grab it here.
All right.
Let's see if I can. There we go. All right. Holly today. And once again, let's pull up the spies and see what she had to work with intraday, because just a reminder for everybody who may not be on board yet and kicking the tires, Holly gets out of everything at the end of the day. So she comes into each morning fresh with no trades. And Steve, keep an eye on the questions panel. I'm on my laptop, and I gotta minimize it so I can see what I'm talking about here. All right, and the market, first 15 minutes, and then look from there on, guys. We pretty much just treaded water. So you had your gap and basically a 15-minute move, and then pretty much the day was over. Now, don't get me wrong, there was plenty of action out there regardless, and I'm going to show you some. Even Holly found some nice little action, which was very impressive. First off, let's go talk about Holly 2.0, and Steve and I are, and I'm sure everybody else are really looking forward to the day when we do just get back to one Holly. Which is coming soon, I hope, because it just makes it easier to try to, follow the alerts when you only have one to look at and not three of them. But I'm not going to go into Neo and Holly 2.0. You can see very small trade count, and they both just kind of kick back and forth around the break-even point there. So a couple of good trades, a couple of bad trades, just nothing to go over. All the actions seem to be today, and Holly Grell, the old nag, Steve and I like to call her, because she was the original. It's been around since the inception, and if I had to guess, it's going to be the one that makes the cut. Steve, wouldn't you say probably Holly Grell is probably going to be the name of go back to the original nag?
Probably, yeah, not the nag,
yeah.
but yeah.
No, nothing that. Yeah, Holly Grove. All right, guys. So let's talk about. Man, there was some really decent trades and some really interesting trades. I want to start off with one that didn't finish up all that much in risk on and full risk. Once again, just to remind everybody, we do have a full risk column now. That's if you ignore the stop. You can see down here these bottom two. Okay, they were stopped out and risk off. They remained stopped out and risk on, but when full risk is applied, they continue to count in either direction it goes. So you can see where the difference is in risk on. That's the only place you're going to see a difference between full risk and risk on, because you can see all these exit reasons right here, other than stop out, they all had the same P&L, but full risk on a stop out would continue to count, and that's why full risk ended up today higher than all the rest of them. And at one time, I think, Steve, she was up close to $4. And so market, you know, kind of pulled back, and I'm sure some of these things worked against her. But man, let's talk about some of the trades. There was some good ones. You can see the big winner. Look at the three big winners. What are they, guys? They're all bullish pullback, strong stop, pulling back. You got, you know, interesting pattern there. You're seeing some sort of strong setups, and boy, this is a beauty. Not much of a pullback there. You know, it was in this candle. Holly caught it on the pullback there, alerted, and wow, some really nice risk on, and really it was higher, much higher than that at one time. But a very nice trade there. Let's take a look at this. Another one, second big winner here. And I do have these sorted by, let me sort them by full risk, so we can, since we're looking at that final number here. All right. I know a lot of guys in the room, Barry was saying, caught this one, and what a beauty that was. Look at this chart. Okay, look at that trend. Volume, again, pretty strong today, and all-time highs, no resistance. That's the kind of stuff that can keep the train going, and it's exactly what happened today. This one got going down the track, man, and would not pull back until the final hour. And some really just beautiful. You're seeing another no risk, you know, no pain trade, I should say. It's a bullish pullback call, and maybe 2 or 3 cents lower, and then just takes off for the rest of the day. I've been impressed lately with Holly. You know, she got into a little funk there for several weeks, and that's when the market was kind of in a funk. But boy, now that the market is kind of trying to choose the direction, we're seeing it's being much easier for her. Here's another one, a bullish pullback. Okay, went a little bit lower. Guys, you hear us talk about how you can get a better price than Holly. You can see right here, this stock probably remained, you know, at least 15, 20 minutes below her entry. So you had plenty of time to get a better entry than Holly in that one right there. And then boom, nice little pop, nowhere close to the stop. Because you can see it sold off there at the end, but still, nonetheless, this was a beautiful pattern here, guys. If you look on the intraday, if you remember, Sun Power was ripping all day long. Solars were very hot. Run is a solar, and you can see there a nice little, I can't call that a horseshoe, but you can still see it's a range break, as Jamie would call it. And then after the range break, we got a little pullback. I believe it's a pullback. No, yep, quarterback. So there was the entry. And boy, some nice, see, the entry was 1813, and you know, got up to 1870 area, 75, 76 area. So a very nice call there from Holly as well. And there was another one on here, and I think it didn't finish up that good, but XON was not a bad call. Another beautiful call there, another very strong chart. The only thing about this one is you were close to the 200-day moving average, and you did have some resistance going back over here. But before you hit it, there was still some very nice alpha all the way from 1830 to 1877, something like, very close to the run numbers there. So man, there was some good opportunity. This is the kind of stuff you want to see. A lot of green, a lot more green than red. Just a good day for Holly, the old nag Holly Gorell. A lot of good opportunity out there, and it's AEM. You know, this is one that was a stop. Gold was tough this morning. I think Steve can vouch for that. You can see Holly barely got stopped out of that one, and this is why sometimes you go full risk. You don't get stopped out, get penny whipped, I like to call it. You don't get penny whipped right there, and wow, night ended up on full risk up nicely. So Steve, on the questions, am I getting any questions out there on
yeah,
Holly
you
today?
could actually. Well, Jeff commented that Holly he agrees. He's been doing much better as of late, and he always has a question he's trying to figure out, and you can demonstrate this since you got the screen, how to go in and change the options to show what account value. There's 3 different ways to show the account value.
Mm-hmm.
And Andy will explain all 3. I don't know if they'll satisfy your question specifically, but it'll at least maybe show you a way in which you can reflect those share sizes, something more custom to what you want to see.
It's a nice thing to do, because now you're not just looking at pennies over here. You're just not looking at basic points. You're putting monetary value to it, and you can see here I can go through full risk here. It's up 1,300. I can go through risk off, was up 914. Still good day. And you may be asking, well, what is that based on? I'm about to show you here, but I kind of wanted to show you what's really cool when you put some values in there. Some realistic values of the number of shares you may be trading, and here are your options. You can go to Tools, Options, and AI Trade Size, okay? And you can go dollars per trade. So if you want to allocate $5,000 for every trade, you just put in 5,000. If you want to do shares per trade, just put in the number of shares. Maybe you want to do 100, 200 shares. I don't recommend this one because, if say you're trading 100 shares and you got a stock that's a $2 stock, okay, that has a 20% move, you're not going to reap the rewards because you only bought 100 shares. You're buying the same amount as if you had bought a $100 stock. So I would either go dollars per trade, or what I like the best is based on stop loss. Every one of Holly's calls, okay, comes with a stop. Okay, so what I have in here is $200. So that is saying that if the trade goes to the stop price, that's what I'm going to lose, $200. So then you can see I have different values for the number of shares in each one of these. What it's doing is going out and calculating the number of shares it needs to buy. So I will only lose $200 if it goes to the stop price. You can see on these stops down here, I lost $200. You can see the number of shares for AEM was 714, LK was 421. So it goes out and calculates real quickly the number of shares it needs to buy based upon the stop loss. It's brilliant, is what it is, and it's more true to life when you start seeing these numbers in on your blotter here, very similar to what you would see on your own blotter. For you. Let me pull out my questions panel so I can see what it thinks.
I think it does, yeah.
Okay.
All right, so
all right, good.
Let's see this one. Is the smart stop dollar amount in B plus computed the same as Holly's stop loss? Yes, Wally, it can be. It's the same calculation, the same functionality of setting that. Yeah, it is. Yeah. All right, I'll take the ball back from you here, and we'll come back to green. And all right, we will press on. Yeah, the trade of the week, I think, is next year. So the trade of the week this week actually didn't fire. We've had a lot of trades lately that are trade of the weeks that did fire early, and this one has not done so yet. So let me go back and put in my number. I believe it's 4418. Grab that price alert. Actually, I don't need to put that in there because we're going to be messing with our price alerts, but I'll just highlight that with a nice orange bar. So looking back on our intraday, there's our orange bar, and I'll tell you what I liked about this. You know, it didn't go up and tickle it and trigger the trade yesterday on the Monday open. I am thankful for that. But it's playing that game of, you know, vacillating back and forth before it decides what it wants to do. So again, the good news is it didn't trigger any trades yesterday and sold off deeply. You know, I was definitely surprised that it sold off as deep as it did. I thought that might have been it, you know, typical opening drive right about there. Matter of fact, you know, well, so bounced off there and then dove down lower. Well, okay, how far did it dive down into the daily chart here? Let's take a look. Well, it definitely breached the 10 period, and I never like to see that, but the good news is the trade hadn't triggered, so this wasn't necessarily a risk management decision that had to be made. It's just an example of the I shouldn't say death throngs, but the noise that's going back and forth between the war that's establishing over here between the sellers that want more downside and the buyers that are saying that's it, you know. And we are in that camp thinking that this is it. I want to show you something really interesting before I forget this thought. If I go back to a monthly, I had Andy go back and look at this thing monthly, and you know, why did it pick that spot to bounce? I'm going to grab this orange line right there and look at that. Get rid of this nonsense and noise up here. How about that? This tip of the monthly candle back here in January 2014. Move ahead, monthly candles, and look at that. It's right where the price action decided to bounce. We'll go back to a daily chart. So there is significance in this area down here that this orange line is drawn. And we are seeing kind of the same basing that we saw in old Newmont down here. Similar, but you know, basing couldn't go lower, resting on the moving averages, trying to pick a direction. Oops, HLF. So we're still in possible trigger mode. If it takes out 44.18, it will trigger the trade to be alive. Another horrible example, really, just how dastardly it can be. You know, just sold off nasty yesterday and then bounces right back into play today. So this is why we try not to take an opinion or take a guess until it gives us a confirmation and breaks out of the range. And again, I'm thinking the golf gods and the trading gods are the same people, but thanking them for not triggering yesterday on the open. Could have very easily done that. You know, if a lot of, I'll be honestly, if a lot of people had put in buy stops and just left those good till canceled buy stops, the algorithms might have seen those and tried to trigger them, and they could have, but it didn't happen, thankfully. So, you know, the takeaway is here, if we look at this perspective, there's our range for the most part, and we're just waiting for a trigger. If we do get a trigger in this thing, there is a contingency of shorts, 20% short float. Could be a very quick trip up to the profit target of this declining 50-day moving average. You know, speaking of Newmont, we went back and talked about that. This is not look back. There's never been a single reason to get out of this trade. I'll talk a little bit more about this later. One day right there that tried to get you out, and the space between the lows of these candles and the momentum line, again, just does nothing more than illustrate the tremendous underlying strength in this thing. It's like a magnet. When you flip it to the other side, the opposite pole, it doesn't want to touch, doesn't want to get near this thing. And that's about as strong as an imprint you can get when you look at a chart, whether it's an intraday chart or a daily chart, and the distance between its moving average. So Newmont has just exceeded expectations beyond all. And what was the other one that we were missing out on here? There was one more. And then actually Lyft and Newmont were the ones.
Stay on Lyft there for a second. I just want, guys, anytime you're trading, and I'm not even sure what we mentioned in the TLW write-up, but when you're looking at Lyft, anytime you have a new issue like this, you got to allow it to breathe. The averages are just being developed, so they're going to be sloppy. You really can't. It's going to be a lot of sloppy action because, once again, they're just really now getting started. So, I mean, you know, this is one where I hate to say it, but you got to still be in this because it just wasn't much of a pullback at all. And I don't even know what percentage that was, since Steve. And we may have. I don't know if we used any moving averages. I don't know if we did or not. But
I think we did. But
okay,
is what it is.
It's a tough one. Yeah.
The bigger picture, what I see. The bigger picture that I see is this. These are the kind of things you want to see in a base. You want to see that last push, that little teepee bottom down and back. And then this is what we have, the dynamics and the anatomy of an inverted head and shoulders. That is head and shoulders is nothing more than a confirmation of a possible trend change. Possible and confirmation in the same sentence. I don't think that works. But I choose my words carefully. All right, so that's trade of the week. Let's see if it triggers HLF. It might. If it gets a nice close, obviously we want to see a giant push on a big volume candle, confirmation, and maybe a nice close on highs would be really nice to see and lift, since we did get a break of not getting a false trigger yesterday on the open.
Did you go over X?
I forgot to go over. See, I was asking you. There's one more that we forgot to talk about. Yeah. So here again, guys, there's this, kind of there's just such thing as an inverted. No, I'm sorry, as a kind of a off-centered head and shoulder. There's a word for it. It's not perfectly centered, where the neckline isn't always perfectly centered, but
Igor head and shoulder.
Yeah, hump on one side. But again, here's our little deal down here: the capitulation sell-off and the quick buyback. This is oftentimes, in hindsight, something that can really mark a good basing pattern. So we've got, 2 or 3. Go ahead.
No, go ahead. Finish your thought. But I just want to add something before you move on to something else.
Just going to say, this is the kind of stuff we've been focusing on the last few weeks, if you haven't noticed. That's all I was going to say.
Yep. And Steve, go back and show them the candle after earnings. This is the kind of Wall Street manipulation that you'll get in stocks. So if you'll circle the big green candle after earnings. Okay. From that point on, guys, we had 3 tier 1 downgrades of X after what I thought was incredible earnings. Okay. And you see the doji at the very bottom. Circle the doji at the very, yep, that doji right there. That morning, Goldman Sachs came out, and that was the 3rd downgrade of it. Even after it's fallen, I mean, the thing has fallen like 70% from its highs, and that's Goldman Sachs coming out with a downgrade after all that.
Goldman's not stupid. They're not idiots. They're just they're not. They're just devious. That's all.
I can't tell you how many times I've seen them pick tops and bottoms, and it's. But anyway, anytime you see that, you see a tier 1 downgrade and the stock goes up, man. In most cases, jump all over that thing, man. It's just.
I just have to say, Goldman is not smart. They're devious, and I guarantee you that their clients, the preferred clients, they got a special email on this day right here.
Well, probably so.
The rest of everybody didn't get. Well, we're telling them to sell them, but what we really need is buy it. That's how the world works. Misdirection. All right. So moving on from the trade of the week. I want to highlight, remember last week, we didn't have a whole lot to look at. We had this giant move and this exhaustion candle here. And I said, guys, there was not a single long, well, there was a single long because I put it in there, but not a whole lot of longs that looked decent. Let's just go back here real quick. Let's see if we can line up these charts. I think it was that day right there. And look at all those crazy shorts that we called last week, and I'm going to do it in such a fashion. I think I've got them sorted by a lot of them. So let's see. Yeah, they're going to make me go back and back it up. So I've got to back up this one, and there was our green line the next day, triggered, sideways, downside alpha. What do you know? That one worked. Here's the one and only long. We go back in time on this one. And there's our trigger. The next day follow through. Next day noise. Nice. There's that wick. When you see that wick, guys, in a trend, it's a complete reversal, an intraday reversal of trying to, if the close, and if that candle closed below, you'd have a totally different decision to make, but it didn't. It put in the perfect wick that you want to see. This, to me, always means in an uptrend, when it tests that moving average, pops back up and closes above this rising moving average, passed the test. All right, fail would have been closed below that line. So a little bit of alpha on that one as well. Let's see, that was the last day today. Today was a decent day, so that was on the one and only long. Okay, here's another short. Let's back this guy up. This was a good one. So there was our signal day, and boom, right off the bat in the money. Really nice gap down the next day, and then I'll tell you, when you get your move in a swing trade, a day and a half or 2 days, if you got a nice profit, you should be taking at least half of it. Day and a half sometimes is all you get. Let's go back on this one. This was a really nice stall up there, tickled the green line the next day. And look at that, 1, 2, 3, 4, 5. This one's still looking lower except for a bounce today. That one worked. This short. Now these were all short-lived because of what the market was doing. It was basically doing what APTV did here. APTV kind of shows what was going on. Very little give back there on a short for one day and then sideways action and nothing. And I think from here on out, as of today's triggered price, they're a bit higher, but this one's still non-threatening at all. I mean, there's our trigger day right there, and 1, 2, 3, 4, 5. Today was the only day it bounced back out of. So, you know, once again, pretty decent alpha out of these. This one we only got 1 day of glory out of, 1 day and then a big bounce. And let's see what's happening down here. I think these started to not do that well. This one I loved. I loved the way Momo looked, but it only gave us really 1 day of movement and then another gap down. It's not easy when you're just trading gaps like that. And then down here, the ones that didn't work that well. So let's go back in time and say, boy, this one just tickled the trigger and closed on the, I think at the close that day, and then reversed the very next day. You got to get out, you know, after probably the gap up that next day would be the realistic time in which you get out, something like that. And then the bottom of the barrel down here, this one again, 1 day of alpha. That was a beautiful setup there, triggered, really nice, but then immediately reversed. And what are you going to do? It's going to happen. You got to manage that price action. You can't control it. All you can do is manage it. And then Hertz was the worst of them all. I think Hertz actually had some news looking at that candle and that volume. There was our setup. There was our trigger. It didn't even close on lows and never looked back. So that one was kind of nasty. That was the worst of them. Yeah. So that was last week. Again, a completely different tale last week because we had a market that was going straight up and there was a need for consolidation. Well, now this week we're back to a lot of great setups because, of course, the market gave us a resolution. We have resolved higher, and so now we've got a lot of setups that are looking similar to this or maybe getting close to looking like that. And I went ahead and marked up a few. Let's see, we got time. All right, so I'm starting with the ones from the A table, which is the one I'm going to talk about a little bit towards the end here in our ebook. I'll have a couple comments on that, but the first three are from that one. ZS is the first one, making sure there's no earnings yet 12 days ago. Just a really nice flag. Again, all of these charts are going to be nice uptrends. They're going to have nice scores in the 90s, the score filter score. And they're not going to be chasing. We're going to be looking for consolidation under something that makes sense. And I'm just going to say this level probably right here. I'm going to give a head start candle. I could go to this wick or this wick, but if we get close enough, I like to anticipate. So the high of that candle is going to be 72. So we'll right click and do 72. All right, there's one. And from the A table, Twilo comes and goes off this one a lot. It's been on there a lot, but look at how it broke out, sideways action. And now what is forcing the issue of the candles higher? It's our old friend, the momentum indicator, which is something really want to lean on. So not a great close today, red candle, but still nonetheless, choppy noise until we get some resolution. I'm going to use this candle back here. The high of this one, 46.29, we'll go 46.30. All right. And we'll set that one. And then the third and last one from this scan is OKTA. And you know, I know a lot of things to like here. Big push up, doing just what the market's been doing, but didn't participate today. Maybe it needs to be OCD and come down here and flip the light switch a few times and touch that moving average tomorrow on the open. And then it might be free to go. But also note, really tight squeezed range. These from tight ranges can come big moves. So I'm just going to use today's high. Launch it. Actually, we're going to go a little bit higher. There we go. All right, so those are the three from the score high trending stocks that are consolidating. And now I knew that this stock scan that Andy created called the Daily Bull Flag would have a lot of other good ones on there as well, just because of the backdrop of the way the market looks. Very similar to this. This is something we can see on the Bull Flag scan. But the Bull Flag scan is going to bring in stocks that don't quite have stock score filter scores in the 90s. We're going to just look for you know, that's really the only difference here. We're just kind of looking for the same pattern, but they might not have a great score. We'll check the scores and then we'll scroll that down and keep an eye on them as they come through. All right. So now from that scan, we've got SYK, Stryker. It is a medical device maker, but pretty decent. It's being repelled by that moving average and took out that high there. Could have some follow through, so we'll go with today's high, 198.37. You know, we're trying to hit forehands as the market is showing us it's time to hit a forehand. Last week we were hitting backhands because the market was showing us it was probably time to hit a backhand. So always looking at the bigger currents first. Yeah, if Pedro wants that scan, if we have it.
Yeah, I was just telling him I'm dropping it in the chat window.
Okay, then there's another one. That was Ian. There's also a question from Pedro. All right, the next one is going to be, oh, I like this name, Bro. I didn't like the way it closed though. Bro Chacho. Definitely OCD, it's touched its line. It threatened the line today. It closed above its line. I would have liked to have seen it not puke at the close like this when I wrote these down. This one looked a lot better, but I'm going to leave this in there. I'm not going to get focused on the single wick today. You know, a couple stocks have shown us that, like HLF being one of them. Anything can happen tomorrow on the open, but we're looking at the bigger flagging picture here with this moving average. So I'm going to just use today's highs, and we'll go right above there and just eyeball it and throw it in there. All right, what else we got from the scan? We got AQN. Another flag, didn't touch the line, but doesn't always have to. You never really know. Maybe it's going to be strong and not touch the line, but this one just seems like it's being slowly supported and buoyantly held up by this moving average. So again, I'm going to do today's high on this one. This one's a lower price stock at $12. Move that up 1 penny. There we go. No, 1 penny. Stop it. I guess, there we go, 27 is what I had to go to. MDT also from the bull flag scan. Pretty similar to some of the others we've seen. Now this thing has a kind of a personality to it, but so has the market. I mean, what do we see here? 1, 2, 3 perfect dojis in the last 7 days and a couple of tight ranges as well. You know, this thing could be prone to dojis, but you know, if it has its day, it could have its day, or it just might take a few doji gap days to get your money, and you got to sit overnight. But nonetheless, that pattern is something I can't pass up here. So we'll take out. Let's take out today's highs. Volume increased today as well. Just eyeballing that. I think there's one more from this one. Yeah, HOLX. Again, kind of repelled, never touched that moving average, but looking like it might try and do something. All these tops are very close. We use today's high. Eyeball that as well. Okay. Now, this one was not on any scan. It's just something I happened to catch. I'm sure it's on a scan somewhere, but Roku is just defying all odds. Let's see, they don't have a lot of shorts. 80 million float, but this thing touched yesterday, fast line, touched nice fast line today, and love the way it closed with a nice bottoming tail wick. I think if this thing tries to take out highs, we might as well throw that in the mix as well. So 13 cents is the number here. Oops. 106.13. All right, so there, ladies and gentlemen, is your list for this week. There are no shorts in there. The market, I don't believe, dictates looking for any of those. And let's go ahead and share those. And then we're going to drop this into the chat window while I finish up with one more content, price alerts. I don't think we're going to have time today to go through the sectors, but I've got one more thing to show you. The price alerts are now there in the chat window for whoever wants to right click and save that cloud link. You can drop those price alerts we just set into your own mix, and hopefully next week we'll be talking about how these things generated some alpha as well.
And also, guys, I did throw in Extreme Master Blaster in the Bull Flag Daily in the chat window as well for anybody who wants that code, a cloud link.
Cool. Barry was nice enough to drop a note today and remind us that ENPH is just a monster. And I'm bringing up the PDF here to my chapter of the book that Scott is going to show you in a minute on how to get, if you haven't downloaded this new ebook, there's five or six chapters from all of us with kind of different slants and different angles and different takes. But I thought I might take a victory lap here for a little bit, because when you sit down and write these things and you start doing screenshots of charts and scans, the one thought that crosses your mind is, well, shit, I hope these things stand up over the test of time, because they could easily just not look that great, and then it's etched in stone as content. But, you know, I'm not going to go into the whole setup. I want you to read the chapter and read the philosophy behind all this. But, you know, this is a decent strategy, this A-table strategy. Again, we just marked up a couple of charts from that scan as well. But this ebook is going to go through a lot more of the process of what I'm looking for and what I like, and some of the charts that catch my attention. And as we, you know, look through here, ENPH, you know, that screenshot was taken a while ago, not too long ago, but it was taken back here. You know, so ENPH is certainly holding up over the test of time, over this this discussion we had back here. It looks like when we talked about it, and it's just been trending really nicely. The other interesting one on here was I didn't put the chart up, but you know, PRO had a lot of interesting metrics going at the time. Let's see how PRO looks right now. So PRO is not doing bad at all. So certainly kind of happy with the examples that came out. But not only am I doing this to pat myself on the back and take a giant victory lap, but to also humble brag, but to show you guys that these things can be good swing trade stocks. Let's go back to ENPH real quick. You know, there was really only one period in this trade where you were tested, and I'm going to highlight that. It would have been right about, again, before I get to there, test, we talked about test, pass, right? Pass the test. Test, passed, pretty much for the most part. But that's the one that was a little shaky. By 3 cents, the candle closed below the moving average. Yeah, you know, but rules are, you know, can have a gray area. On the good side of this particular candle day, I liked the bottoming tail. So I guess I'm trying to show you how to try and stay in these trades and not get shaken out of them too quickly. This candle was a little shaky, but you know, it had a really nice bottoming tail to it, and it portended continual support of that moving average. And here we are again on highs today. So this moving average can just do wonders if you can find the right stocks, maybe had earnings, have a high short float. That's what's going on in here as well. Everything starts to line up. That is all of the idea behind the chapter in that book, The Swing Trading, which Scott is going to now tell you about. So that's it. If you have any questions, info@trade-ideas. What stop loss would you suggest for those swing trades, Waleed? I would want to not see a candle close below that rising 10 period. So that's why I just highlighted that red candle there and saying this one was tricky. It could have fooled a few people. It only closed a few cents below the line, but on the plus side, it went deep below the line and popped right back up. I like that bottoming tail popping right back up. So hopefully that would, you know, keep somebody that's, or at least, you know, trying to stay in a long-term trend, because both of these two, Pro and the ENPH, have definitely stayed true to form. Here's a great example of a small, tight range. The tighter the range, the more follow through it could have. That was a pretty tight range, and this is pretty nice follow through. So enough of that. I'll go ahead and bring in Scott to take us out and show you guys where you can get that ebook.
Yeah, okay, a couple items. We do have a podcast. Should have a new episode out on Friday. So make sure you subscribe by going to whatever place you listen to podcasts in and search for Trade Ideas Podcast. And then add it, and you can check out the back issues too. We've got some good interviews with some guests in there if you scroll through the back issues. There's a new ebook series. There's 3.
Back on talking here in a
There
few
we
seconds.
go. There's a new ebook series. 2 chapters per book, 3 books. Go ahead and get it at trade-ideas.com/setup. It's got stuff about doing swing trading, active investing, managing range breaks and pullouts. Both Andy and Steve contributed chapters, so, you know, check it out. It's free. Just go to that page, put in your email address, get the download links. June Boom is the code that's good for the rest of this month, so you got another week or so to use it to save 15% off your first month or year of Trade Ideas. Those of you that are standard subscribers can also do this to upgrade. Just go to the homepage of Trade Ideas, log in the upper right, and click Change My Subscription, plug that in, and you'll save 15% off the upgrade. You can follow Steve on Twitter at TodayTrader. Also follow at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook page to like. Also, email any of your questions to info@trade-ideas.com. That's the best place to send them. It goes into our help desk software, so it won't get lost, and it gets sent to the appropriate team member to get your fast reply. Thanks, everyone. We will have a recording up later on tonight or tomorrow. Thanks, Steve. Thanks, Andy.